Hey guys, it's Will. Hopefully you're having a good one. So we're here in Buenos Aires, and I'm actually this is where we're at right now. You can see we're near the streets, and we're in a beautiful part out of my mother-in-law's house here. Before we head back to California tonight on a flight. Today we're going to be going into the top AI data center stock, APLD, and some others. Hopefully you guys enjoy. So first things first, you got APLD dropping 6% today. At one point this morning, we saw them drop more, down to about $24 a share. And then they've slightly consolidated from left to right, finding a little bit of a support here towards middle or end of the day for the market. So they're consolidating from this $24 price point. Guys, we are on the road to 50,000 subscribers. And it was crazy to see how much we grew, even while Tammy and I were traveling. So I appreciate you all. Thanks so much for tuning in. Subscribe. Let's jump into it. So we saw them sell down, holding below that EMA. We were kind of anticipating this sell down because back here about 3 days ago, they crossed below the SMA. They were at that resistance, that previous resistance here around this $27, $28 price point. And they started to get rejected. They sold back down. Now we see them back down here around this previous resistance around 23, 24, and then potentially selling down further to that $23 price point if they continue the downtrend that they're in on the short term. If you take a look at the long term on APLD, it looks very bullish. We saw them go from $3 a share in April, continuing up into that $40 range, so 10x. Then we see them sell back down, and again, they're still holding well above the 200-day moving average. They are still in their overall trend over the last year. And this pullback, we saw them push up after bouncing on this rising support level. The longer term, you got September, you got back into July, back here into December. And then when they started to push up, they did correct back down. Now, the longer term horizon, we would most likely expect that they're going to continue this momentum up into this $30 range to $40 range. But again, it's okay that this is happening. A couple of reasons why. The market in general pulled back. It's not just this company. You do see a lot of green from Apple, from Taiwan Semiconductor, so still top companies holding momentum. Uber was up. Oracle is still having a nice recovery after they sold off in this recent earnings, but they're acquiring TikTok, so that's really good for them. But anyway, with APLD, in the data center market, almost every data center stock that we could see today, with the exception of maybe Arista, ANET there, had a pullback here. You can see TSSI was down, BITF was down, Supermicro Computer, CoreWeave, IREN, these are the top data center companies. Wolfstock pulling back, NBIS pulling back today. And it was kind of expected because, again, if you look at a lot of the charts, you look at their trends, they were starting to push up, looking for the recovery, but, they're still validating that they're not just going to continue down. There's still a lot of them recently pulled back significantly, and then we see them sell back down. It's like, okay, can we still see them hold the uptrend? That's what we're getting here. Now, spending, nothing changing. When you look at the market of data centers, increased spending, increased AI usage, increased infrastructure and spending on GPUs, on the compute, and more spending from big companies in the realm of AI in 2026 is going to be anticipated. And it was already announced in all these last earnings over the last few months. They all said they're investing more into AI. So with APLD stock, while they're down to this support level, the technicals indicate they might continue this overall uptrend here and continue into doing something like this, which would be about a 25 to 50% increase. The Prophecy app, when we are getting our analysis, would indicate a similar kind of projection. When we're looking at the news for APLD and most data center companies, why we're following them so aggressively is because they have signed very large deals that haven't yet showed up on their financials. What does that mean? Well, when you find a company that hasn't yet been able to post their gains or post their new revenue or post their new balance sheets into the financials because they haven't reported their new earnings, yet you see those deals come in For example, you look at APLD, and they've signed these multi-billion-dollar deals, literally over $15 billion deals in the data center space for constructing these data centers for companies like CoreWeave and building hyperscaler these AI HPC campuses here for the ability for these AI companies to scale, for them to increase their compute in a way that allows them to integrate with, NVIDIA. They're partnered with Supermicro Computer. They're partnered with Dell, Intel, and others. And so it just really puts them in a unique position where they've gotten these new deals. They've got billions now in the pipeline. But then when you look at their financials, it just hasn't showed up. Revenue still up 84% year over year, but the revenue, while it's up big time, it's only about 65 million in a quarter, which compared to, what you would expect from a company that's at 6.7 billion, if they start to reflect where they have their revenues coming in from these new deals, then the revenue or their market cap most likely would grow much more. And so currently they're pricing in as if they have about $100 million per quarter in revenue to about 150 million, which is still above where they're at. But with the recent deals that they've had, we're anticipating even more revenue than just 100 million or 150 million, but more like 250 million to 500 million dollars per quarter, which in that case would put their market cap much greater. They probably see more like a 25 billion dollar market cap or something like that. So that's where you start to see like the 3 to 5x potential for the company. But in the near term, again, still just with their current financials, a little bit premium with their current balance sheet, 2.4 billion in assets. They're still, they're up there. 2.4 billion, it's good. Their market cap's at 6.7. It's good. It's not bad. But if they're really going to scale, you're going to see that revenue increase. You're going to see that deal pipeline start to show up in their financials, which would drive them higher. So until that happens, they're still trading, at that slight premium. Maybe they sell down, maybe even more conservatively. Could we see a sell down like this, kind of, back down into, this moving average first, back down into this $20 range to $18 range? Could we see that? It's quite possible. With the AI market, a lot of the companies now are starting to catch on, the institutions, that everything that we've really anticipated in revenues and in the growth has been a lot smaller than what's actually taken place. We've actually seen a lot more growth and a lot more financial growth from these companies. You look at IREN, it's got some similar financials as well. They came in with the hundreds of millions of dollars in revenue with the positive net income, and their market cap's only at 11 billion. So maybe you see similar comparisons to IREN. IREN signed with Microsoft. They got about $4 billion in assets, and they're only just a few more billion more than IREN. just a few more billion. It's just a few more billion. Now it's funny, but you really got to look at the long term. Looks really good, and so the short term, some of them trading at a premium, which is expected. But when you look at the sheer pricing of where they're at to the let's say $9.7 billion AI cloud contract with Microsoft, I mean, that's almost the size of IREN's current market cap, not including, their assets. If you include their assets into that, they're currently sitting on what's more money than their current market cap. And so with that type of news, a lot of these companies waiting for a lot of those things, or not waiting, they're probably seeing it, but the investors kind of waiting for it to show up onto the financials for it to make sense. So again, long-term looking very good. I would imagine a lot of these companies would see growth. I don't want to see my portfolio down. I'm in the red today, day after Christmas. We had a good start to the week. But once again, we continue to hold the long-term here in these companies. In the short term, there's also volatility. We've been seeing that as well. I was just pulling it up. Let's do it. APLD over inside of the Prophecy app. Next month was looking bullish. We could kind of see what the different AIs are pointing to. But you can see they're talking about even that $20 price level. The $20 support level would be possible. They bounced to $20 recently. That's a support level in the next month. The resistance now, they're talking about that 25.75, which is right kind of where they're at. Is that the case? Let's see if Grok really checks out. Yeah, so 25.75. Let's see here. In the 1 hour, this would be for the next month. Yeah, so kind of anticipating this right here. It was a previous support level and kind of a previous resistance here. And they dropped below that moving average, see that green line, and then that's when they just broke it. That's what the AI is talking about. If we look into the next day, let's see, it's kind of projecting negative. Actually anticipating APLD is going to sell down more according to Grok because of that breakdown. You can see the breakdown dropping below. You can see, look, it even says it here in the AI. Recently rejected at that 50-day moving average around that 2460, forming the bearish engulfing candlestick. That's exactly what we were just talking about, that resistance. So the AI can see it as well. That's the Prophecy app. I've actually designed this with our team to do analysis the same way I do analysis for projections for the next hour. See even maybe a little bounce towards the end of the day, but mostly red throughout the day here, even in the next week. But it looks like bullish into the next month for APLD. Next 6 months, very bullish. Next year, very bullish as well, 30% up to the $30 range, according to Grok. We use all the models. We recently designed this this year. It's been a really great tool. One thing that I've been looking at as well is kind of the insider, the top transactors here for the market. You could see here that there's been more activity on APLD. Nvidia has been an institutional buyer, and then on the insider side of things, you see a lot of activity as well. The sells are more than the buys. They've had more sells on the insiders than the buys. This kind of is interesting, but the volume, the amount that's being bought is greater than that is being sold. Okay, so overall looking pretty good on the insider side of things. But anyway, we're going to be using this tool more in 2026. If you want to get your hands on it and also join our daily live trading sessions, Monday through Friday, we're there. You can get the latest companies. You can even see we got an AI analysis of any news article that comes out. You can actually do it. It will go through the article for you here. See what these news articles are all about without having to go deep. We'll go straight to the source for you and use the best models in the world. It's going to be the first link in the description below for Prophecy app. We got that holiday sale if you guys want to go grab it. And it includes our live sessions. If you would like to join in live Monday through Friday, we'll be there tomorrow morning at market open. Not tomorrow morning, on Monday at market open. If you want to tune on in, it's the second link below in the description for StockMate. Let me know your thoughts. What do you guys think about these data center companies? Do you think I'm leaning too bullish in the long term, or do you think that lines up? A lot of the AIs, a lot of the targets would say so. Some of the media says the opposite. They say it's a bubble, all these things. But let me know what you think. Based on what I see firsthand, these companies are growing, and we're going to see that show up more. But in the short term, you see the rocky starts, the rocky entry potentials for the shorter term trades, and also the requirement of having risk management on the short term. So it's all part of the plan, and it's part of the dynamic markets that we're in right now. So again, if I earned your thumbs up, hit the like button. Do consider subscribing, guys. Thanks so much. We're almost on the road right now. It's 100K, but we're eyeing that 50K target. So I appreciate you all, and I'll see you guys in the next one. Take care.